Hello everyone, my name is Vikas Agarwal and I'm the founder of Altport. Alt is your alternates and Port is your portfolio management services. So this has things have joined in the sense that we are now emerging as one of the largest platform for investing in alternates and portfolio management services. So in order to educate and empower the entire investor community, we keep organizing these knowledge-based sessions and we invite industry experts. Therefore, we call this show as Ask the Expert Show. So welcome to the brand new show of Ask the Expert. And with me, I have someone very special, very dear to me. We know each other for many years now, have been associated with each other for many years. I have Archit Lohia on the call. So, Archit, first of all, thank you so much for accepting our request and agreed to do this for all our investors.
Thank you. It's always a pleasure to work with Altport.
Great. So let me have the privilege of introducing Archit. So Archit, how do I introduce you? CFA. He's also a CA. He's also a CAIA and also LLB. So I don't think I need to have any more anything to be added here in terms of introduction. So Archit is mentor to many students in the industry. Is helping a lot of people to clear a lot of professional exams also, and I have also attended some of his classes, and very nice the way he explains the entire industry. So today we'll try and read his mind and understand how does, I mean, basically how to unlock the power of accreditation. So that SEBI has kind of come out with new papers, and that suggests that if you want to invest in AIFs, which is alternate investment funds, the minimum ticket size is 1 crore. But if you qualify for accredited investor, then the minimum threshold goes down, and there are other benefits also which we'll try and understand today. So over to you, Archit. I won't take too much of time, and then we'll have Q&A. So you have another 15 minutes to kind of give us the perspective if you want to run.
Sure. So thanks for the kind introduction, Vikas ji. It is like we've been working in the education space and skill development, but now with this entire thing on accreditation, being practicing CAs in the industry, we are also working with SEBI and CDSL to issue the network certificates, which will then be helpful for investors and even distributors and even AMCs to get the certificate of accreditation and then invest lower ticket size amounts in the AIF PMS as well as SIF markets as well, right? So I'll talk more on that front. I'll not talk more on the education part. So quickly, I'll just share my PPT, right? Okay. So I hope you all can see now.
Yes, I can see your PPT.
Perfect.
Over to you.
So yeah. So now today we'll talk on the investor accreditation framework, which SEBI had launched in 2021 itself, but it was not mandated for certain AI funds and even products like your PMS and SIF. Okay. Firstly, let's understand what do you mean by an investor who is accredited. So now we all know that the GDP of India has grown exponentially and the per capita income is also very high. So SEBI is now saying that those investors who want to take higher risk, they should also be offered certain customized offerings and customized products to invest in, because they have the ability to understand the risk, and also they are normally appointing distributors and IFAs, RIAs to handle their investments, right? So why not give them the benefit of higher risk, higher return? That is the major advantage which many countries have, like US investors also have this benefit, even in Singapore, then Mauritius, then European Union. I'll talk on that as well, right? So the major idea in India is to allow investors who have the capability and the willingness to take more risk and earn a higher return. Okay, because till when will you invest only in mutual funds and SIPs? And even in PMS, you must be seeing that there are multiple PMS investors who are catered through one offering. Even in AIF, there are multiple investor classes of units which are issued, and they all have to bear the same risk. So that will not always prove beneficial for higher ticket size investors. And that is why SEBI has introduced this concept of accredited investors, right? Now, what do you mean by an investor who is accredited? So, if you're an individual or an HUF, you have to have a net worth of more than 7.5 crore rupees, okay, out of which at least 50% has to be in financial assets, okay, that is 3.75 crore of your net worth has to be in financial assets. Now, I'll just quickly tell you what comes in financial assets. So, all your equities, unlisted equities, AIF units, PMS investments, then even international equities, then your PPF, EPF, all of them come under financial assets. Only gold, jewelry, and real estate or land, that is not covered under financial assets. Okay. SEBI has also clarified that the house in which you stay, your primary residence, cannot be counted as part of your net worth, right? And please ensure this is net worth, it is not total assets. So the accreditation agency, that is CDSL and NSDL, they'll also check whether you have any liabilities in front of those assets. So if you have any home loans, personal loans, car loans, it will be deducted to get your net worth of 7.5 crore, right? So mostly in India, we are seeing that 7.5 crore is not a very big amount. It's not a big challenge for HNI investors because most of these guys have this much of a portfolio, and as well as some people invest in real estate as well, right? In addition to equity markets to diversify. So that if you count the entire portfolio, 7.5 crore is not difficult, right? In the second case, if you have an annual income of more than 2 crore, then also you are eligible automatically. But again, we all know that in India, people may be having a net worth, but they not always show that much income on the ITR. So that's why the third option is you either you have a 5 crore net worth, and in addition to that, you also have a 1 crore income which you report, right? And again, out of that 5 crore, 50% has to be in financial assets, right? So this is more of a hybrid model. It is very easy to achieve these kind of net worth criteria. Now, just to draw a parallel, this concept was there, introduced when dollar was around 75 rupees in 2021. So just to tell you, in US, the criteria is $1 million of your net worth, and your annual income has to be more than $200,000, right? So on the similar parlance, SEBI has also taken these figures in India. Similarly, if you see Singapore, now Singapore is also a very good example because over there it is net worth should be 2 million Singapore dollars, and again out of that 50% has to be in financial assets. So in a way, if you ask me, Indian regulators have taken the mix of US norms and Singapore norms to get at these figures of net worth 7.5 crore or income of 2 crore, right? The third criteria, which is that 5 crore plus 1 crore income, that has not been there in any country up till now, and that is the first time Indian regulators have introduced this. So it's a very good step, I would say, because it can ease the entire process of accreditation for investors as well, right? In Mauritius also, we have 5 million Mauritian rupee as the threshold, so that's also a parallel. But broadly, I would say that today, in terms of dollar, now it's 9 crore rupees, not 7.5 crore. But again, because of values have not been revised, in India, that is without Gift City, you have this 7.5 crore. In Gift City, you have $1.5 lakh. That's a very big amount. So if you have a net worth of $1.5 million, then only you'll be treated as an accredited investor. Okay. So even in Gift City, we work with the regulator and some of the funds over there. So many of them are now trying to onboard investors who have this net worth and can invest lower ticket sizes as well, right? Apart from that, trust companies and LLPs, they all have a 50 crore criteria. So either your AUM or your net worth has to be more than 50 crore. And in case of a normal partnership firm, which is under section under Partnership Act 1932, so in that case, all the partners of the firm have to independently meet the criteria applicable to individuals, right? So now again, when I say individuals, as a husband, me and my wife can combine our assets and make it a total of 7.5 crore. Okay, so again, I'm repeating, as a joint applicant, you can include your wife or your spouse to be accredited. But if you want to club the assets of your father or your brother or your son, then that is not allowed. Okay, each of those members also have to meet the criteria independently, which is 7.5 crore net worth or 2 crore income. Okay. So joint investors only include husband and wife. It does not include father, son, and brother, etc. Okay, that's a very good clarification required right now in the market. Now the next question comes is why you want to get accredited. So the most important benefit obviously is that uh, investors who are accredited do not need to invest 1 crore in AIF or 50 lakh in PMS or 10 lakhs in SIF. You can even invest less than those amounts. So in the industry, we are seeing that some of the AIF schemes are accepting around 25 lakhs to 30 lakh rupees from individual investors, which up till now we could not do. But now, as I was mentioning earlier, investors want to explore high risk, high return products, and that to not commit a very high amount individually at the front. So for that purpose, if you are only committing 25 lakh rupees, then you can not only diversify across different funds, but also take the benefit of exploring new opportunities. Like even for like if you're doing SIPs up till now, you'll now start doing commitments to PMS, AIF, etc. Right. Secondly, if you are in the AIF industry, then I'm sure you would be knowing that there are angel funds, which are a Cat 1 AIF. So right now, all angel funds have to mandatorily show that all their investors are accredited. And the timeline for that is November of 2026, I think 9th November, right? So till 9th of November, if you don't get the certificate of accreditation, then you'll not be able to participate in any angel fund scheme. Okay. Similarly, all angel funds have to get the certificate of accreditation for the investors before 9th of November, right? So that is one thing. Like if you are angel investors, then please get the certificate of accreditation. Similarly, if you want to participate in any co-investment vehicle, which are launched by Cat 2 AIFs, so a co-investment vehicle also recently only the circular has come that a Cat 2 AIF can pool in money separately from angel investors or eligible investors. Okay. And they can combine the money and invest in a pre-IPO deal or an unlisted block deal or a private market deal, right? So this also is a very important development, and that is why we are seeing a lot of HNI investors are looking to first get the certificate of accreditation and then get these benefits. Okay. There are certain regulatory reactions also, like you don't need to have a standard PPM template as an AIF fund if you're onboarding only accredited investors, right? So this is also one big benefit which is there for investors. Okay. Now customization of investments are also very, so this is more of a gift city concept, I would say, that gift city funds are now customizing their investment opportunities and deals separately for AIF normal investors and accredited investors. Okay, so this is going to come up a lot in a big way in India as well, where customizations of your deal access, deal flow, and even cash flow will be allowed to accredited investors, right? And lastly, if you feel you don't want to get the benefits of being accredited, you can anytime withdraw your consent and the benefits will not be available to you, right? Up till now, we've not seen any applicant withdrawing their consent. Up till now, we are seeing people investing lower ticket sizes in AIF, PMS, and SIFs by this certificate of accreditation. Okay. I'll not take this in detail, but the major benefits I'll tell you now. Last month only in December, SEBI has said that an existing AIF fund can convert themselves into an AI only scheme. On the right side column, if you see, an AI only scheme is a accredited investor only scheme. So for these schemes, all your investors have to be accredited. Okay. Up till now, the accreditation had to be done by an agency like a CDS or NSDL. But now SEBI is trying to make it very easy. They are saying that if the fund manager is committing to SEBI that all the investors today in the fund are accredited as per their knowledge or as per a NEPO certificate issued by a CA, then you do not need to go to CDSL and NSDL to again get a certificate of accreditation. Okay. There are two things. First step is to get a NEPO certificate from a CA and then submit that to the agency for certificate of accreditation. So there are two certificates involved in this entire process. But now to make it easier, SEBI is saying that an AI only fund does not need to do the second step. Only the first step can be done. That is, get the investors to have a net worth of at least 7.5 crore as per the eligibility criteria, right? So this is a very big benefit, and that's why if you see a lot of first-time managers are in the process of launching the AI only scheme and raise smaller ticket size of investments from multiple investors. Okay, and obviously the best case is what, that if you are taking smaller ticket size of investments, then you cannot limit your investors to 1,000 investors only. I'm sure you know that AIF investors, there cannot be more than 1,000 in one scheme. But in an AI only scheme, you can have n number of investors because you are anyways raising lower ticket sizes. Okay. So I would say an AI only scheme gets you the benefit of AIF funds and strategies, and at a lower investment applicable to even PMS and SIF as well, right? So this AI only scheme, I would say, is now a very big chance for investors to start investing and get exposure in AI funds, right? And to little bit ease it out also, uh, there was a circular that pari passu rights have to be maintained by a manager of an AI fund. That circular does not apply to AI only schemes and even large value funds. Okay, large value funds means that every investor in the fund has a 25 crore worth of investment made individually, right? So the same benefits of large value funds are also given to AI only schemes launched by existing AIF funds. Okay, the extension of tenure can also go up to 5 years instead of current 2 year time period, right? So in a way, if you see in a nutshell, SEBI is trying to promote funds which are serving only investors who are accredited, because that means you are serving as an AIF manager. You are only serving those investors who are capable of investing in an AIF fund, right? Because I'm sure you all know that nowadays in angel schemes specifically, there are youngsters getting involved and they lose money very early in their life, and that creates a little bit of a problem. So that is where SEBI is trying to safeguard their interest as well, right? NISM certification, which was required by a AIF manager, is now exempt. So you do not need to pass your 19C or 19D or 19E certificate. That is easily now gone. You don't need to work hard for that. Okay. And now the most important part is you do not need to appoint a trustee for an AI only scheme. Okay. Otherwise, for normal AI funds, you have to appoint a trustee, and a trustee will ensure that you have handled all the units and investments in a proper manner. But now that is not the case for an AI only scheme. The fund manager can himself make sure that all the norms are being followed, which are issued by SEBI. Okay. So these are again some good developments happening from SEBI's point of view. As I was mentioning, for AI only schemes now, SEBI has said that if the manager has done the initial due diligence and taken a net worth certificate from the investors, then you do not need to approach CDSL or NSDL to charge you a fee for issuing you the net worth, the certificate of accreditation, right? So this is one very big development happening again. People always ask me that, what is the process of getting accredited and what documents you require. So again, documents are very minimal. Okay. So in the first step, when you want to receive a net worth certificate, you just need to provide your latest DMAT statement holdings, which shows your investment value, your last 2 years ITR. Now you don't need to submit 3 years. Only last 2 year ITR is required now. Okay. Bank statements are optional only if you want to show that you have enough bank balance. If you don't want to show bank balance, then it's not required to be submitted. Okay. Balance sheet is required if you have liabilities. Okay. If you do not have liabilities and if you don't make any balance sheet because you are an individual, then it's okay. You just need to give a declaration saying that I have no liabilities in my personal name. If you do that, then it is done. And lastly, only if you are having real estate in your net worth, then for that you have to submit the ready reckoner rate proof, not the market value. Okay, CDS will not take the market value of your property; it will only take the circle rate, as we say, or the ready reckoner rate in the market. Okay, so if you see, essentially, even if you just submit the first two, that is your DMATs and your ITR, then that is more than enough. Okay, then the next step is then, as a team of CAs, we issue the net worth certificate to you once you give us the documents. Okay, the network certificate issued by us will then be uploaded on the website of CDSL. We have partnered with CDSL. So on the CDSL website, we will upload your network certificate. We'll also upload your copy of PAN and Aadhaar. Okay, and we'll also upload your undertakings which you sign and give it to us. So that is a template which you've already made. You just have to scan that, sign it, and that's all. Your process is completed. Okay, so if you ask me, it's not more than a 2-day process today. If you have your documents ready, today you submit the documents. Now we are ensuring that we have an AI tool. Using the AI tool, the next 48 hours you'll get your network certificate if eligible, and then after that, the AI tool will directly upload your documents from our website to the CDSL website. We have an API with CDSL as well. Okay, so why I'm telling
So
you?
basically, Archit, so that detail of the technical and operational can be discussed with investors one on one. We'll
Correct.
broadly talk about the benefits of that. So maybe over to you.
So see, I've just put some points to ponder on because these are some of the questions that get in the industry every time. Okay. So firstly, investors come and tell us, and even distributors saying that we don't want to submit the data to you. It's personal data and it's confidential data. Okay. So for that, that is a reason why we have made an AI tool. Okay. The moment you submit the data to us on the AI tool and you have received the certificate of net worth, the data will automatically get deleted. Okay, so we are DPDP Act compliant as well right now, right? And as well as CDSL also ensures that you only need to submit minimum documents. You don't need to submit as proof of 10 properties or 100 DMAT statements. If you have one DMAT statement which has a balance of more than 7.5 crore, that is good enough for us. Okay, we don't want all your assets value to be there, right? But definitely we want the value of your liabilities because we are issuing you the network certificate as well. Okay, there are some distributors who have OCI cardholder as investors. Okay, so over there the simple rule is that if your OCI investor has an PAN card, only then they will be able to apply for accreditation. If you don't have a PAN card, then you cannot apply for accreditation, right? The next issue which we get is foreign investors. Okay, if you are having foreign investors as your client, then again the same rule. If they have a PAN card in India, then very good. Otherwise, you can tell them to get a network certificate in Gift City. Because in Gift City, you do not need a PAN card to become accredited. So what we do is that our network certificate is also valid in Gift City. We will issue you the network certificate in dollars term, and over there you can upload it on the website of IFSC. Okay, so that is also one big development from our end on that. Okay, and that brings me to the next point, which is Gift City accreditation. In Gift City, getting accredited is very easy because we have companies like Dovetail, which are offering you platforms which are having a platform as a service. So when they are working with us to ensure that the certificate of net worth is issued by the fund manager, not by any agency. Okay, in India, the problem is that up till now there was an agency who was involved, but in Gift City there is no agency involved to issue you the certificate of accreditation. Okay, so that is becoming very easy over there. Now the big question is: are AIF PMS accepting accredited investors as well? So the simple answer is that what we are seeing is your middle-sized managers, like your mid-sized firms and small-sized firms, are now targeting a lot of investors and telling them to give you only 25 lakhs, 30 lakhs instead of 1 crore. Okay, because even they know that it is easier to get small ticket size investments than getting one big shot of 1 crore from certain investors. Okay, so basically this opens up a lot of big market for mid-size and small-size funds. And then what will happen eventually that if the capital is easily available to mid-size and small-size funds because of lower ticket size, then definitely even the larger funds will then slowly start accepting smaller ticket sizes. And that we are seeing now, in fact, Marcellus has now started taking smaller ticket size investments in Gift City Fund. Okay, so it is having like a full effect on the market. Joint assets, I've already told you that you can club your assets with your wife or your spouse, but not of your parents. Okay. Now, just to end my PPT, this is what the CDSL charges you. Okay, If you're an individual HUF or something, then for a 2-year certificate, they'll charge you 10,000 rupees plus GST. That is 5,000 of processing fees and 5,000 of the certificate fee. Okay, that is totally 10,000 plus 80% GST. If you want a 3-year validity certificate, then it is 5,000 plus 9.5 thousand, which is 14.5 thousand rupees. Okay, the fees are higher for partner firms and trusts and body corporates. Okay, what we do is that we only charge 7,000 rupees plus GST for issuing the network certificate. Okay, that is the major role that we play, and then that is uploaded on the CDC website. But we do not charge any additional fee for drafting your documents, uploading your documents, or even processing your application. We only charge you for the network certificate. Okay, so that is one thing that we are offering. So if you ask in the cost wise, we have two
So
parts
as
of
you
the cost.
said, Archit, we don't have to really describe this much in detail about costing. That we can have it one-on-one. My team will reach out to them and
Perfect. So
do
there
this.
are questions which will definitely come on this, because I
No, let
always,
the question to come. No, why do we need to really ponder on?
Perfect. So I'm almost done with my PPT. So if you have any questions, so this is why we are doing this. I am myself, as Vikas knows, we are also actively co-investing in listed equities and AIF funds. So we are coming across many investors who want this certificate. So I thought, why not have a portal which can do this for them in GIFT City as well as India. So that is why we have launched this portal recently, only 1-2 months back. And obviously, my main work is into investments area, right? So if you have any questions, do feel free to ask me. I'll be happy to
Yeah,
take
you
them.
don't have to show your details, Archit. That is my team will do it. If you do it everything, then what would my team do?
Okay,
So
so
if
anyway,
you want to then reach out to the investor directly, or you want us to help my investor to reach out to you, how do you want to do it?
so there's my team. I also don't interact with investors one-on-one because it's a lot of waste of time from my end. So my team
So
is
there's
there.
no point in sharing these details. No
So
point.
anyway, so now we have questions session if you want.
Right. So see, the way we have tied up is that with Archit is that if you have any question, please reach out to our team of experts. Ours is a platform, so it's not that you watch this video and then reach out to Archit directly. You can do so if you wish to do so. But our team of experts will understand whether you really need to have this certification or not. We'll try to address that and have a detailed discussion. So my question to you, Archit, is that now that this process has been introduced by the regulator, so what is the minimum threshold if it is say 1 crore in case of normal AIF for most of the AIFs, and what about PMS?
So in the industry, we are seeing certain schemes accepting 25 lakh rupees also instead of 1 crore. Okay, some schemes are taking 20 lakhs also. Okay,
Mhm.
so that is what we are seeing. And in PMS, it's around 15 lakh rupees.
Mhm. But is there any regulatory requirement that you need to have some accredited investors in your fund? Something
No.
like that.
So that is only if you want to launch an AI only scheme. Okay.
Mhm.
But now what's happening is that, in fact, we were speaking to Ruchi Madam also from SEBI. They are trying to involve a lot of platforms who are doing this accreditation, because in the long term, they want to work on this model where they will give benefits to only those who are eligible to get invested,
Mhm.
not to everyone. Okay.
Right.
In fact, even they are saying that nowadays, even for 10 lakh of SIF, they are taking 1 lakh rupees also. Some of the SIF schemes are even taking 1 lakh rupees. Okay. So it's good for managers if they want more capital access. It's good for distributors if you want to get uh, your revenue from small ticket sizes as well in a volume game. And it's good for investors because they can diversify their investments across assets.
So, for the benefit of our audience, what is the key difference between accredited investor and non-accredited investors, according to you?
The net worth is the key difference. Okay, the moment you prove your net worth to be more than 7.5 crore and you get the certificate of accreditation, then there are certain benefits which I was saying earlier, that you can participate in angel funds, you can participate in an co-investment vehicle also. If being a normal investor, you cannot participate even in co-investment deals. And CAT 2 AIFs are now having a lot of co-investment deals coming through CIVs. Okay, and this is only acceptable for accredited investors.
No, but as a non-accredited investor, I can always participate and place my money directly with these companies, right?
No, so see that there's a difference between placing your money with a Cat 2 AIF and placing your money with a co-investment vehicle launched by the Cat 2 AIF. There are two different entities which are launched. Okay,
Mm-hmm.
a Cat 2 AIF, let's say if there's a Cat 2 AIF which is having a 500 crore AUM, okay,
Mm-hmm.
in that you can definitely invest your money of 1 crore and above. But let's say there's a 150 crore deal happening in
Mm-hmm.
which that AIF fund manager is putting the funds 100 crore rupees corpus, for example. Okay, the balance 50 crore they are raising from third parties who are not in their fund already. Okay, so that 50 crore of worth of investments can only come from investors who are accredited. That cannot come from normal investors.
Mhm. But what was the reason behind and what was going on in regulators' mind to come out with this classification of accredited investor? In the sense as what is it that they are trying to achieve? Number one, from a regulator point of view, and number two, how does it really benefit the investors?
So what I was seeing is that, see, in angel funds, there were many investors who were investing lower ticket size of even 5 lakhs, 10 lakh rupees in startups. And many of them have lost money also because over there, the eligibility was only 2 crore net tangible assets earlier. Okay. So the SEBI then saw that, if everyone participates blindly in these deals, then definitely there's a chance of losing money. Okay. And secondly, if you want your markets to be efficient, then you should only offer high risk, high reward products to those who are eligible to invest in those high risk, high reward. Okay. So basically, to just judge your eligibility, I think SEBI has taken a global view, like they've seen the global countries as I was mentioning, Singapore, US, Mauritius, and they have accordingly launched it in India as well. Okay. And as far as investors are concerned, I would say that investors are getting to diversify across multiple funds as well. Now, let's say if I'm an investor, if I'm an HN investor who has 2 crore of surplus to invest in AIF segment, I would rather put 2 crore in 5 funds or 6 funds instead of putting 2 crore in only 2 funds, right? Like how you diversify a portfolio across listed, large cap, mid cap, small cap. Now you can diversify a portfolio across multiple AIF managers as well.
Right.
So that's a very big benefit which many people have already started. It's just a matter of awareness which we are trying to create, and so that you can get the benefit.
Great, great, great. Great. So with that, we'd like to conclude the session here. It was wonderful speaking. Maybe if there is any closing remarks, please share that, and then we'll conclude. Thank you.
No, I think I've covered most of it, whatever is happening in the industry, and it's always good to work with platforms like Altport. So thank you, Vikas, for inviting me. And yeah, so recently, as I was telling, Ruchi Chojar madam has interacted with many participants. What we are hearing is that now they also want to use the DPI, that is a digital public infrastructure of UIDAI and eProtein, and even your CDSL and SDL to make this investment process faster. So
Mhm.
I would why I'm doing this webinar is to just make people aware that please try and get the certificate faster, uh, and then you can start investing in angel funds and also in CIVs.
Right. So as a platform, we also encourage most of our investors to kind of apply for this and then diversify the portfolio. I agree that it is very essential, and eventually you will see that more and more investors are applying for it. And in case you find any difficulties, you can reach out to our team of NISM experts team that we have. These relationship managers, wealth managers are in touch with you, and they will in turn help you reach out to Archit and get this done as soon as possible. With that, I'd like to conclude the session here. Thank you.
Okay, thanks. Thanks for Vikas.
Thank you.